Hey guys, how are you all doing? So Dan from Trading with Dan here. This is our Bitcoin evening update. So we will go straight over to those charts. Here we go. There we go. Right, so yeah, so with the pennant we had drawn this morning where you could see the sort of tightening formation, we obviously broke out of that, had to have the expansion and volatility. I have said this before, and I'll just reiterate the fact, when you have an expansion of volatility, that obviously, firstly, the fact that you're expecting an expansion in volatility doesn't imply the direction. It's not directional, it's just the fact we're going to have volatility. And then as such, that volatility can occur in basically two different directions. So you can have a move up and then a move down, like you see with these wicks. And that is obviously that counts as towards like the total range, the total price range that you can have, and i.e. the increase in the volatility. So yeah, so just as I could, because you might look at this and think, oh well, we're expecting a move, the price is basically exactly what it was earlier today, but we have basically broken up and then come all the way back down, sort of broken down a bit and come back up again. So we've had volatility even though we've ended up in the same place. So breaking out of a pennant, or breaking out of well, especially a pennant formation, obviously ascending triangles and formations like that, formations that that indicate a direction, i.e. an ascending triangle is obviously the increase in buying pressure, then that obviously wouldn't necessarily lead to a move up and a move down, or a move down and a move up, but pennants and formations that are basically neutral, this is not really implying any strength to the up or the downside. It's just that the market doesn't really know where it's going to go and it just tightens up and then it breaks out. Those can obviously break out up and then down, or down and up, or up and keep going up, or down or keep going down, but either way the price where they end up isn't necessarily what's important, more just the actual range of movement that you get that you weren't getting before. So right, so we cleared that up. So there you go. But right, so as you can see, this 4 hour, we're still basically at we're still basically holding this 9,200 support, which again is good. Those oscillators will be resetting even more, so that's obviously good. The daily might obviously be looking like it wants to tick over, but I think we'll start to get some movement once the CME is open. Weekend Wall Street has stayed pretty much where it was, so that is good because these stocks were very high. Look at the close on Friday. The only problem we've got is we've got a daily 9 coming up, and they can obviously trigger a bit of a sell-off. You can see the nice daily 9 there at the well, we can call it the channel there, but the channel didn't exist then because that was just the first point. Then we see the daily 9 here that rejects the price, and then this is the next daily 9 here. So I mean, there's no reason to not suspect we are gonna come down and test the bottom of this trend line. Even if we come down slowly and just meet it over here somewhere, I mean, that's fine. But yeah, so that will potentially cause weakness in BTC. So that doesn't necessarily happen to happen. We can break to the upside of this channel and just go on like a bit of an exponential push upwards, like we see in certain stocks at the moment. But yeah, so that it could drag us up anyway. But yeah, if we do have a bit of a sell-off, I mean, I would expect BTC not really to be able to hold this 9,200 level, because we are looking relatively weak compared to stocks. What happens is stocks seem to be going up, we seem to be going up slightly or holding our ground, and then when stocks go down, then we obviously get dragged down, because we are sat at the moment only realistically $200 higher than this 9,000 level, yet obviously stocks are easily into their highs, either into their recent highs. So yeah, so maybe we're going to get some more weakness. Whilst ever we are obviously getting pinned down by this downwards channel, is obviously going to suggest a downwards bias. But we are looking to make moves through here. It's not looking very much like a head and shoulders anymore. So that is good to see. That's good that we've basically ruled out that potential bearish formation. But yeah, it's not. I wouldn't say it's looking too bad, but like I said, the caveat is always: are we going to get a sell-off on the stock market off that daily 9 or not? It's earnings season as well. Earnings season, got lots of big companies releasing earnings, and earnings is different to just where they generally just talk about rubbish. They've got to report actual reality when we get earnings. So but some companies are just withholding guidance, so it's difficult to necessarily see any serious sell-offs based on earnings, because ultimately the market knows earnings are bad, and they know that lots of companies are not doing very well. Obviously they know some companies are doing well, and those companies are obviously seeing the appropriate moves in their share prices. But yeah, so we could have some volatility, could have some downside volatility. We'll just have to see. But yeah, we are looking like we can take out the top of this trend line. So the top of this channel, and as you can see, we've got this other trend line as well. But that one's not so important. Realistically, where we are now, because I mean, we've had a lot of action above it anyway, and we've not really made much of a move higher. And then also, it's not necessarily exactly where it should be drawn. So I wouldn't necessarily be looking at that formation. I would be looking more at just the actual channel, the main channel that we've been in, which we do look like we're getting above that, and it does look like we're going to have the top of that channel trend line and the 9,200 support both below us. So I find it difficult if stock markets stay where they are or go up. I find it difficult to see us not basically drifting or floating and moving up to here. There may be no real necessarily push to get us up. There may be no big move, big wick up, but I feel we are gradually gonna make our way up to this resistance again at 9,400. And I mean, I think we'll get, if we do come up, I think we'll get through it. We obviously have been we proved that we're not getting through this 9,200 anytime soon if we're back up here, and then we'll be back up here again after getting up here on this base this time also. So I think that will take us through then, and that's probably when the fireworks will start. That will be a higher low, and also confirm these sorts of like as higher sorry, these will be the high lows, and this will be this will be a higher high relative to this level. So then we've only really got the matter of this higher high, this high to get through, which obviously will be easier once breaking this one. So yeah, we could start to look pretty bullish, and I think we'll start to make some progressions to the top, to basically the top of this box. So obviously if we do get below 9,200, then yeah, I would expect us to see us probably come down to I would probably expect to see it come down to the 8,600 level, to be honest. I obviously lost one of my lines, like moving my stuff around, but we'll extend this box anyway just out here, so it's it's just got more time there. But yeah, but that does give us a very easy trade at the moment, to basically buy 9,200 with your stop. I've been placing my stops not much above 9,100, just because obviously we get the wicks, but I also have orders to get filled on some more of these wicks, because the way you've got to look at it when you are trading anyway is that with wicks especially, you obviously got your ultimate stop level where you are going to stop, and mine's roughly not in line, but not far off this bottom, this level here. But you got to kind of look at that. If this is your stop, you can have buy orders in here, and you could even have quite large buy orders close to where your stop is, because ultimately those orders, you don't have much risk attached to those trades, because you are very close to your stop. So it's quite a simple concept, really, isn't it? So you might have your position size that you want to trade, but then you might then have your stop. But then, I mean, within literally like 10 to 15, $20 of your stop, you could even double your position size, because your stop's so close anyway, your risk is so low, and maybe it's just a wick down. Maybe you do get wicked out your stop, but you're going to get wicked out your stop anyway. But if you don't, you're ending up with a twice the size position, and you can then, do you know what I mean, scout some of that profit off it, bank some profit, and then also reduce your actual entry level. So after you've done that, reduce your entry level, and you can even potentially lower your stop a bit even more, because you've got sort of like that profit you've already made hedge. You're long at a shorter level, you're long at a lower level, so you can adjust your stop a bit more. So there's ways you can manage positions there's ways that I manage positions, just based on, everything is based on risk ultimately. Everything's based on risk. So, and that's why you've always got to find the levels that you are managing risk from, and the closer you get to that level you're managing risk from, obviously the more orders you can potentially put in. So I'm not suggesting obviously you will start putting massive orders and you stop, but yeah, it's just something to think about. It's just something to consider. Also, it's always worth having orders to take partial parts of your position off, just because you could get wicks up. I mean, as the market gradually moves up to those orders in an orderly fashion, it's fully fine and appropriate for you to take those orders out of the market, because it's not a wick then, is it, if you've moved up towards that level in an orderly fashion. And then you could just then move those orders higher, so that if we then get a wick higher up, then you're going to get filled there instead. So yeah, some trading tips for you, some trading tips on how to manage positions. But anyway, yeah, so back to what we are looking at. I do expect us to basically drift up from here. If we don't, like I said, we can easily manage risk from here. If we do drift up from here, we are obviously kind of looking at having a good chance of breaking through this 9,400, 500 level, which I think, well, we may have to play out this zone a bit. We played out this zone for a while, haven't we already? I feel like we then may have to play out the next level, unless obviously we do get a big spike up. But if we get a big spike up and take out this, then yeah, I mean, we can, by all means, I think we'll definitely play out this zone for a bit, unless obviously we get something crazy like China comes in and says that they're now gonna trade only in Bitcoin or something, and then yeah, we may get a spike all the way through. But yeah, I feel like we're gonna get a move up is on the cards. It's just, I feel it's a higher likely scenario, just probabilities. Obviously, if we get below here, then that will be nullified, and I'll be expecting actual moves to the bottom of the channel. And I feel like either in this zone or in this zone, we are going to have to play a base of support, maybe have some wicks through the support, much like we are doing here. Test it well, check that it's good support, and then we can then use that as a solid base to push up. And I think that is what I think is the likely scenario. That is a likely scenario, just looking at the price action. But obviously we've got to keep an eye on what stock markets are doing, because if they do start to become a bit weaker, then yeah, then we've got to consider. But I think the other thing we do have to consider, I think we are basically seeing a move out of we've seen basically inflation plays. We're seeing moves out of currencies, and I would propose that stock markets are not necessarily as strong as you may think they appear by the charts. It's more that the dollar that they are valued in is going down, and then if you consider the fact that gold and silver is going up, if you then use those as a benchmark, as a harder currency, as an actual, you then price say the stock market in gold and silver, because obviously you understand gold and silver is going up as well. You can then see that the stock markets aren't actually going up as much relative to a harder real currency. They're only going up loads against a fiat trash currency. So in effect, what you've got going on is that fiat trash currency is going down against everything, including like gold and silver, and then relative to each other, the stock market and gold and silver, I mean, the stock market's not going up as much. And also this year, gold and silver is up more than the stock market. I'm pretty certain of that fact. Let me just have a look. I think it was the S&P. Look at the S&P for this year so far. So obviously this year included all this rubbish, didn't it? So it's hard to obviously say that, isn't it? So, but yeah, this is why obviously I know this fact is true, because you can see the stock market. So while the S&P isn't much higher than where it was, isn't much lower, is basically near enough flat. We'll just call that even. And then if you want to go to the Nasdaq and look where the Nasdaq is from this year, at the start of the year it will say around here. So we will say the Nasdaq is up 23% this year. So the S&P basically flat, Nasdaq up 23%. Now let's look at gold. Gold since the start of this year, which is here. yeah, it's basically here. If we look at how much gold is up this year, gold is up. Well, actually, gold is up 18%, 19%, so not quite as much as the Nasdaq. Not quite as much as the Nasdaq, but yeah, it kind of puts it in a bit of perspective though, because obviously we know gold is more of a slow-moving asset. It doesn't move as much as tech stocks anyway. But yeah, so if you value the S&P in gold terms, it's down on the year, even further than it's down based on actual fiat currency. And then if you compare the Nasdaq, which is up quite a lot on the year, it's not up much compared to gold. And then let's just have a look at silver whilst we're here. We'll just check silver, but obviously silver's not been performing as well. In all fairness, silver may actually be down on the year. No, silver's basically flat on the year. Yeah, silver's basically flat on the year. So this is why silver, I think, has got a pop in it. I mean, if you just look at those horizontals here, once we get above those horizontals, we are going to see some serious acceleration to the upside. And I've still got that bet on with one of my friends I've had it on for ages now though. When Bitcoin was like, probably, I don't know, it was way over 10,000, maybe it was 11, 12, 13, maybe it was when Bitcoin was high, and I was saying that we're going to see $30 silver before we see 30k Bitcoin. Yeah, and he was biting my hand. He wanted to double down on that bet, but I was like, oh no, we won't double down on it. Do you know what I mean? We don't need to start making things more about the money rather than more about the principle of the bets. But I would propose that this has a lot better chance of getting to basically here than Bitcoin has of getting to 30k first. Basically, this got a better chance of getting here first, because I think there'll be some serious acceleration. I think we'll have we'll have some days where we're up like $1 or $2 in a day, $1 or $2, $3, maybe even $3 in a day. And there's not you don't need a lot of days of $3 to get to $30 from this price point. But anyway, so we probably spoke about a few more assets than we really needed to in this Bitcoin video. But the main takeaway is that cash is trash. You can't print more Bitcoin. Obviously, Bitcoin's got other issues, other real-world issues, but I think with the world of decentralized finance, which is I'm going to do a separate video on about DeFi and how its use case is game-changing for Bitcoin on the basis that as a store of value, and like people using it as opposed to gold to store value or to transact in, yeah, that's great. That's a great market. Gold market's big, but what is the biggest markets in the world are the debt markets, the lending, the borrowing markets, the bond markets. These are the biggest markets by exponents. They absolutely dwarf the gold and all the stock markets basically combined. So the actual lending the debt markets, which decentralized finance is basically trying to, or hopefully going to, or at least will play a part in, be it a smaller or larger part, we don't necessarily know at this point, or how fast it will get to any particular scale. But that is the biggest market basically in the world. The debt market, the bond markets, everyone has debt. They have debt to buy cars, debt to buy houses, just general loans for whatever. They have things on finance. They have credit cards. Then obviously governments have debt, the government bond markets, everything. It's the biggest market. So obviously, if it's going to be used as a currency and going to be used as an asset, then there needs to be like a lending element to it, and obviously that's what DeFi is, and that is the biggest. That basically is the biggest use case of any currency or asset, is basically as collateral, or then to buy assets with, and then you pay interest to the person that lent you the money to buy the asset with. So that's the market we're talking about, and that's why DeFi is revolutionary. And how long it'll take to kick off, I don't know, and what stumbling blocks it may have, what pressure it may come under from government and regulators when they realise that we're skipping the store of value and going straight for like the fundamentals, the whole thing, going for the whole lot. I mean, the government bond markets and interest rate markets and central bank manipulation, I mean, they're all basically broken markets that are price controlled and yield capped and fully promote misallocation of capital, and that's why the markets are all broken. So DeFi is going straight for that. It's going straight in for the kill, in like the absolute jugular of the world financial markets. The malfunctioning, the massively malfunctioning world financial markets, and it is going for the part of it that is the main source of all the malfunction and misallocation of capital and just whole rubbish shenanigans and corruptness that go on in world financial markets. That's what DeFi is doing. If you can basically get loans, governments, people, whatever, can get loans and have to get loans in a decentralized way with cryptocurrency and decentralized currencies that can't be manipulated, everything's there for everyone to see, then we're going to have a fair system that isn't manipulated, isn't corrupt, is fully efficient, and yeah, it'd be happy days, won't it, basically. So anyway, there we go, guys. So yeah, thanks for listening. Remember, this is not a financial advice. I'm not a financial advisor. I have a list of videos. I'm going to basically go into a bit more detail on that DeFi one, on why I see DeFi to be basically potentially the biggest thing for crypto, biggest thing for crypto ever, and there ever will be, because that is the biggest market that there ever is and ever will be. Yeah, so that's kind of what I'm looking at. And I'm also going to do the crack up boom video, because that plays into the fact that these markets are falling apart. And then yeah, we kind of need to look at how these bond markets aren't working at all as well. Also, I'm looking at setting up like on the whatchamacallit, on the Patreon. I'm going to set up, I'm not sure how I'm going to do it, but it's not necessarily going to be a signal service as such, but I may say the trades that I'm doing or looking for, or basically looking to do, but it's not just in crypto, because like how I trade is, it's a full, I cover all markets, everything. That's why you might wonder why I have so many screens, because I'm not just watching crypto. I'm basically trading Bitcoin, I'm trading currencies, I'm trading commodities, I'm trading individual companies, I'm trading indices sometimes, I'm trading all that. Well, that's basically it. There isn't really much else. Not really much else that I do on the computers. Obviously, I buy and sell other things as well, physical, real world things. But yeah, that's what I do on here. And when you have an overall view of lots of different markets, like you're a lot more patient with your trades, and you only really get in when things look really, really good, because you're not just sat looking at just Bitcoin thinking, right, I need to, what can I do, where's the next trade, what can I do? You're literally looking at so many markets for the best opportunities, and you're fully patient, because you're not going to jump in and at any real like just nonsensical point in any market. You're going to wait till the big moves up or the big moves down. You got the patience to wait for the prices you want. You got to wait for the event that you need, that you want to happen, to drive the markets in a direction for like a potential entry you're looking at, because you're looking at so many different markets and asset classes that you're not just, yeah, you understand what I mean anyway. Yeah, you understand. I'm going to say I definitely did make it clear. I was just trying to make it too clear by going on about it too much. But yeah, you are more patient just by the virtue of the fact that there'll be a better opportunity somewhere else, and you're looking at the best opportunity in all the markets, so that you're not then going to have to just try and force out opportunities in markets that aren't there, because you're limited in the amount of markets you're looking at. So yeah, so I may start doing a daily video of sort of all the markets, everything, the currency markets, the stock markets, individual stocks I'm looking at, not individual sectors that I'm looking at, just overall trends, commodities that I'm looking at, in like forex pairs I'm looking at, and talk about those in like a quick video update every day. So I might do that, and that might be how I'll structure it. I may have a Telegram channel where I kind of say like just briefly summarize that and what I'm looking at and what levels I'm looking at to buy things in, because there are some really good opportunities that do arise every month in various different markets that I basically exploit. Obviously that might be some value for some of you guys that obviously do have access to trade whatever you want to trade, basically. But yeah, anyway, so yeah, I need to think about exactly how I'm going to do it. So if you guys got any suggestions, then yeah, put them in the comments. Let me know how you think would be a better way to do that, or the best way, what you think would be the best way. That's literally not just, I'm not just like those YouTubers that just ask you these questions and they obviously don't care. They just want you to say something in the comments. But I actually want to know what you guys do think of the best way to do it. And you guys, I know I don't encourage you to write anything in the comments very often, like ever. So I am literally saying this on this occasion because I do want feedback on how best to do it. So if you guys are interested in that, then let me know. And yeah, and that's it guys. So not a financial advice, I'm not a financial advisor, and I'll speak to you guys in the morning.